In Dhaka pays 120,000 takas on the 1st October 2025 for a one-year commercial property insurance policy. The financial year ends on the 31st of December 2025. What is the adjusting entry required at year-end under IAS 1? Option 1. Debit insurance expense 30,000 takas, credit prepaid insurance 30,000 takas. Option 2. Debit insurance expense 90,000 takas, credit prepaid insurance 90,000 takas. Option 3. Debit prepaid insurance 90,000 takas, credit insurance expense 90,000 takas. Correct answer is debit prepaid insurance 90,000 takas, credit insurance expense 90,000 takas. 2. A company receives an electricity bill of 18,000 takas in January 2026 for power consumed during November and December 2025. If no entry was made by the 31st of December 2025, how does this affect the 2025 financial statements? Option 1. Expenses are understated and current liabilities are understated. Option 2. Expenses are understated and current assets are understated. Option 3. Expenses are overstated and net profit is understated. Correct answer is expenses are understated and current liabilities are understated. 3. At the start of the year, a business has an accrued rent payable balance of 25,000 takas. During the year, it pays 145,000 takas to the landlord, which is debited to the rent expense account. At year-end, the accrued rent payable is 30,000 takas. Calculate the rent expense for the year. Option 1. 150,000 takas. Option 2. 140,000 takas. Option 3. 120,000 takas. Correct answer is 150,000 takas. 4. An accountant treats a 45,000 takas advance payment received from a client for services to be rendered next year as routine sales revenue. Rectifying this error before finalizing the accounts will. Option 1. Decrease current assets and decrease net income. Option 2. Decrease sales revenue and increase current liabilities. Option 3. Increase sales revenue and increase retained earnings. Correct answer is decrease sales revenue and increase current liabilities. 5. On the 1st of May 2025, a firm in Chittagong takes a bank loan of 1 million takas at an annual interest rate of 9%. The interest is payable annually on the 30th of April. For the financial year ending the 31st of December 2025, the year-end adjusting entry for interest is. Option 1. Debit interest expense 60,000 takas, credit accrued interest payable 60,000 takas. Option 2. Debit interest expense 90,000 takas, credit accrued interest payable 90,000 takas. Option 3. Debit interest expense 30,000 takas, credit cash account 30,000 takas. Correct answer is debit interest expense 60,000 takas, credit accrued interest payable 60,000 takas. 6. Accrual accounting is fundamentally distinguished from cash accounting because it aligns with which of the following core concepts? Option 1. The matching concept and revenue recognition principle. Option 2. The historical cost convention and money measurement. Option 3. The materiality concept and business entity framework. Correct answer is the matching concept and revenue recognition principle. 7. In the statement of financial position, where should a 15,000 takas balance for accrued commissions receivable, income earned but not yet billed be presented? Option 1. As a current asset under trade and other receivables. Option 2. As a current liability under trade and other payables. Option 3. As a direct addition entry inside the long-term equity column. Correct answer is as a current asset under trade and other receivables. 8. A firm pays its employees every Friday for a 5-day workweek. The year-end date, the 31st of December, falls on a Wednesday. Weekly wages are 50,000 takas. What is the necessary year-end adjusting journal entry? Option 1. Debit wages expense 30,000 takas, credit accrued wages payable 30,000 takas. Option 2. Debit wages expense 20,000 takas, credit prepaid wages asset 20,000 takas. Option 3. Debit accrued wages payable 30,000 takas, credit wages expense 30,000 takas. Correct answer is debit wages expense 30,000 takas, credit accrued wages payable 30,000 takas. 9. A company opens its accounts with an opening prepaid advertising balance of 8,000 takas. During the year, it pays 40,000 takas cash for advertising contracts. At year-end, physical verification reveals that 1,200,000 takas worth of media slots are unused. The income statement charge is: Option 1. 36,000 takas recorded within operating administrative costs. Option 2. 48,000 takas recorded within operating administrative costs. Option 3. 44,000 takas recorded within operating administrative costs. Correct answer is 36,000 takas recorded within operating administrative costs. 10. Under traditional accounting ledger structures, the specialized ledger headers, prepaid rent, and accrued salaries are categorized as: Option 1. Representative personal accounts. Option 2. Nominal operating accounts. Option 3. Tangible real property accounts. Correct answer is representative personal accounts. 11. If a business fails to record an adjusting entry for year-end deferred unearned revenue, what is the distortion on the financial statements? Option 1. Liabilities are understated and equity net income is overstated. Option 2. Assets are overstated and liabilities are understated. Option 3. Liabilities are overstated and equity net income is understated. Correct answer is liabilities are understated and equity net income is overstated. 12. A magazine publisher in Sylhet collects 24,000 takas cash for 2-year subscription starting on the 1st of July 2025. The financial year concludes on the 31st of December 2025. Calculate the subscription revenue for 2025. Option 1. 6,000 takas presented in the statement of profit or loss. Option 2. 18,000 takas presented in the statement of profit or loss. Option 3. 2,400,000 takas processed as immediate income parameters. Correct answer is 600,000 takas presented in the statement of profit or loss. 13. While cross-checking ledger links, an auditor notes that accrued telephone expenses carries a normal closing balance. This balance appears on which side of the ledger page and is brought down as what? Option 1. Credit side, brought down as a credit balance by balance BD. Option 2. Debit side, brought down as a debit balance to balance BD. Option 3. It is closed to zero and has no opening balance in the next year. Correct answer is credit side, brought down as a credit balance by balance BD. 14. A firm pays a 60,000 takas warehouse security deposit that is fully refundable when the 3-year lease expires. How should this transaction be recorded and presented? Option 1. Debit security deposit asset account, presented as a non-current asset. Option 2. Debit rent expense account, presented as an operating cost. Option 3. Debit prepaid expenses, presented as a current asset layout. Correct answer is debit security deposit asset account, presented as a non-current asset. 15. Before adjustments, a company's draft net profit is 500,000 takas. The accountant discovers 2 omissions: prepaid office rent of 20,000 takas was not recognized, and accrued staff salaries of 35,000 takas were skipped. The corrected net profit is: Option 1. 485,000 takas. Option 2. 515,000 takas. Option 3. 555,000 takas. Correct answer is 485,000 takas. 16. Why are reversing entries frequently passed by CA practitioners on the first day of a new financial period for items like accrued liabilities? Option 1. To simplify the routine recording of subsequent cash payments and avoid tracking double ledger legs manually. Option 2. To cancel out previous entries that were flagged as illegal by external tax teams. Option 3. Because the double entry system demands that current liabilities clear every 12 months. Correct answer is to simplify the routine recording of subsequent cash payments and avoid tracking double ledger legs manually. 17. A company pays 90,000 takas for a local billboard campaign spanning from the 1st of November 2025 to the 30th of April 2026. If the bookkeeper records the entire amount under expenses in 2025, the year-end adjusting entry is: Option 1. Debit prepaid advertising 60,000 takas, credit advertising expense 60,000 takas. Option 2. Debit advertising expense 30,000 takas, credit prepaid advertising 30,000 takas. Option 3. Debit prepaid advertising 30,000 takas, credit cash account 30,000 takas. Correct answer is debit prepaid advertising 60,000 takas, credit advertising expense 60,000 takas. 18. An enterprise sublets a portion of its office room to a tenant for 15,000 takas per month. The tenant pays 120,000 takas cash during the year. At year-end, the tenant owes 30,000 takas for the final 2 months. The rental income presented in the profit or loss statement is: Option 1. 150,000 takas. Option 2. 120,000 takas. Option 3. 90,000 takas. Correct answer is 150,000 takas. 19. If a firm pays its municipal holding tax of 40,000 takas in advance for the upcoming calendar year, How does this adjusting step affect the current period's statement of cash flows? Option 1. It is reflected as an operational cash outflow with zero impact on the indirect working capital adjustments. Option 2. It is presented as an investing cash outflow under long-term asset blocks. Option 3. It appears as a financing cash inflow because short-term liabilities expanded. Correct answer is it is reflected as an operational cash outflow with zero impact on the indirect working capital adjustments. 20. A company receives its bank statement showing interest earned on a fixed deposit of 8,500 takas that was unrecorded in the cash book. Prior to statement publication, this requires: Option 1. Debiting cash bank and crediting interest income, expanding current assets. Option 2. Crediting suspense account and debiting accrued assets. Option 3. Deducting the balance from trade receivables line metrics. Correct answer is debiting cash bank and crediting interest income, expanding current assets. 21. At the beginning of year 2, an accountant forgets to reverse a year 1 year-end adjusting entry for accrued expenses of 10,000 takas. When the invoice is paid in year 2, it is debited to the expense account. This oversight will cause year 2 expenses to be: Option 1. Overstated by 10,000 takas. Option 2. Understated by 10,000 takas. Option 3. Accurately presented since cash left the business vaults. Correct answer is overstated by 10,000 takas. 22. The ledger account for prepaid legal fees has an opening balance of 14,000 takas. Cash payments for legal retainers during the period are 50,000 takas. The closing balance sheet asset value is locked at 10,000 takas. Calculate the legal expense charge for the period. Option 1. 54,000 takas. Option 2. 46,000 takas. Option 3. 64,000 takas. Correct answer is 54,000 takas. 23. If an enterprise records its revenue strictly using the cash basis framework instead of compliance with IAS 1, it will fail to report which of the following balance sheet headers. Option 1. Accrued revenues and deferred revenues. Option 2. Share capital and retained earnings base. Option 3. Physical bank balances and cash in hand vaults. Correct answer is accrued revenues and deferred revenues. 24. A business entity rents factory machinery. It pays 240,000 takas for a 6-month tracking window starting the 1st of December. If the accountant debits the full payment to prepaid machinery rent, initially, the year-end adjusting journal entry is: Option 1. Debit machinery rent expense 40,000 takas, credit prepaid machinery rent 40,000 takas. Option 2. Debit machinery rent expense 200,000 takas, credit prepaid machinery rent 200,000 takas. Option 3. Debit prepaid machinery rent 40,000 takas, credit cash 40,000 takas. Correct answer is debit machinery rent expense 40,000 takas, credit prepaid machinery rent 40,000 takas. 25. Which of the following elements represents a current liability resulting from cash collected before the corresponding goods or services are delivered to a buyer? Option 1. Unearned deferred revenue. Option 2. Accrued receivable balance. Option 3. Prepaid operating expense ledger. Correct answer is unearned deferred revenue. 26. A company pays 60,000 takas for an annual vehicle maintenance contract on the 1st of July 2025. The accountant notes down the payment in an expense ledger. If the financial year ends on the 31st of December 2025, the required adjustment is: Option 1. Create a prepaid asset of 30,000 takas, which increases net profit for 2025 by 30,000 takas. Option 2. Create an accrued liability of 30,000 takas, reducing current year earnings. Option 3. No adjustment is needed since the cash was paid within the current tax loop. Correct answer is create a prepaid asset of 30,000 takas, which increases net profit for 2025 by 30,000 takas. 27. Given, opening accrued wages equals 12,000 takas, cash paid for wages during the year equals 180,000 takas, closing prepaid wages equals 8,000 takas. Calculate the wages expense for the year under accrual parameters. Option 1. 160,000 takas. Option 2. 176,000 takas. Option 3. 196,000 takas. Correct answer is 160,000 takas. 28. A corporate firm enters into a contract to provide consulting services for 300,000 takas over a 3-month window starting the 1st of November 2025. Payment is due upon completion in February 2026. On the 31st of December 2025, the firm must: Option 1. Recognize accrued revenue of 200,000 takas and present it under current assets. Option 2. Omit the revenue entirely until cash clears the company's current accounts. Option 3. Record a deferred liability framework of 100,000 takas in notes. Correct answer is recognize accrued revenue of 200,000 takas and present it under current assets. 29. If an accountant understates year-end accrued expenses by 15,000 takas, what is the combined impact on the face of the financial statements? Option 1. Net income is overstated and current liabilities are understated. Option 2. Net income is understated and current assets are overstated. Option 3. Working capital is understated with zero equity changes. Correct answer is net income is overstated and current liabilities are understated. 30. A wholesale firm pays 48,000 takas for a 2-year lease on a delivery crane on the 1st of April 2025. The financial books close on the 31st of December 2025. What is the value of prepaid rent presented on the balance sheet face? Option 1. 30,000 takas listed under current assets. Option 2. 18,000 takas listed under current assets. Option 3. 3,600,000 takas listed under long-term infrastructure tracks. Correct answer is 30,000 takas listed under current assets. 31. Under the modern asset liability classification model, what is the normal balance of an accrued interest income account and how does it change? Option 1. Normal debit balance increases with a debit entry. Option 2. Normal credit balance increases with a credit entry. Option 3. Normal credit balance decreases with a debit track. Correct answer is normal debit balance, increases with a debit entry. 32. A company pays its quarterly office internet bill in arrears. On the 31st of January 2026, it pays 9,000 takas for November, December, and January. The year-end adjusting entry on the 31st of December 2025 is: Option 1. Debit internet expense 6,000 takas, credit accrued internet payable 6,000 takas. Option 2. Debit internet expense 3,000 takas, credit accrued internet payable 3,000 takas. Option 3. Debit prepaid expense 6,000 takas, credit cash 6,000 takas. Correct answer is debit internet expense 6,000 takas, credit accrued internet payable 6,000 takas. 33. Given, opening balance of unearned fees equals 40,000 takas, cash received from clients for fees during the year equals 250,000 takas, closing balance of unearned fees equals 65,000 takas. Calculate fees revenue earned for the year. Option 1. 225,000 takas. Option 2. 275,000 takas. Option 3. 315,000 takas. Correct answer is 225,000 takas. 34. If a firm records a cash payment for next year's office rent as an immediate debit to rent expense, what type of adjusting step is required at year-end? Option 1. A deferral adjustment, creating a prepaid asset and reducing the current year's reported expenses. Option 2. An accrual adjustment, expanding liabilities to cover operational risks. Option 3. An error correction that requires routing through suspense ledgers. Correct answer is a deferral adjustment, creating a prepaid asset and reducing the current year's reported expenses. 35. A retail concern pays an annual audit fee retainer of 120,000 takas in arrears on the 31st of March every year. The accounting calendar wraps up on the 31st of December. The necessary adjustment is: Option 1. Accrue 90,000 takas as a current liability to reflect 9 months of incurred audit service cost. Option 2. Prepay 30,000 takas as a current asset to balance cash outflows. Option 3. Record zero adjustments until the final audit report is formally signed. Correct answer is accrue 90,000 takas as a current liability to reflect 9 months of incurred audit service cost. 36. In a 3-column cash book, why are entries for prepayments and accruals completely absent during the operational month loops? Option 1. Because cash books only document active physical cash and banking receipts or payments, not non-cash adjustments. Option 2. Because adjustments are prohibited from using double entry parameters. Option 3. Because prepayments belong exclusively inside the purchase returns books. Correct answer is because cash books only document active physical cash and banking receipts or payments, not non-cash adjustments. 37. An enterprise discovers that year-end accrued interest income on investment bonds of 14,000 takas was completely omitted. Correcting this oversight before publishing the statements will: Option 1. Increase both current assets and reported net profit by 14,000 takas. Option 2. Decrease current assets and increase current liabilities by 14,000 takas. Option 3. Have no structural impact on gross profit or total equity metrics. Correct answer is increase both current assets and reported net profit by 1,400,000 takas. 38. A company pays 360,000 takas on the 1st of September 2025 for a 3-year building lease. What absolute amount should be expensed in the statement of profit or loss for the year ending the 31st of December 2025? Option 1, 40,000 takas. Option 2, 120,000 takas. Option 3, 320,000 takas. Correct answer is 40,000 takas. 39. The matching concept states that expenses incurred to generate revenue must be recognized in the same period. This principle directly underpins the calculation of Option 1, both accrued expenses and prepaid expenses at year-end. Option 2, the historical cost valuation of office land assets. Option 3, the setting up of share capital foundations during setup. Correct answer is both accrued expenses and prepaid expenses at year-end. 40. A company's opening prepaid insurance balance was 15,000 takas. During the year, it recorded insurance payments of 75,000 takas. The closing balance sheet shows prepaid insurance of 22,000 takas. What was the absolute insurance charge in the income statement? Option 1, 68,000 takas. Option 2, 82,000 takas. Option 3, 92,000 takas. Correct answer is 68,000 takas. 41. If a tenant pays rent in advance to a landlord, the landlord records this cash receipt by crediting an account that represents an Option 1, liability to the landlord, because they owe the tenant access to the property. Option 2, asset to the landlord, under trade receivable tracking files. Option 3, direct equity investment matching capital additions. Correct answer is liability to the landlord, because they owe the tenant access to the property. 42. A company pays an annual licensing fee of 24,000 takas on the 1st of April 2025. The books close on the 31st of December 2025. The adjusting entry to shift the unused portion out of expenses is Option 1. Debit prepaid license 6,000 takas, credit license expense 6,000 takas. Option 2. Debit license expense 18,000 takas, credit prepaid license 18,000 takas. Option 3. Debit prepaid license 18,000 takas, credit cash 18,000 takas. Correct answer is debit prepaid license 6,000 takas, credit license expense 6,000 takas. 43. Given, revenue collected in cash equals 500,000 takas, opening accrued revenue equals 30,000 takas, closing accrued revenue equals 45,000 takas. Calculate the total earned revenue under accrual guidelines. Option 1, 515,000 takas. Option 2, 485,000 takas. Option 3, 575,000 takas. Correct answer is 515,000 takas. 44. A business firm pays its office electricity bill via bank auto debit in arrears. If the December bill of 12,000 takas is processed by the bank on the 5th of January, the year-end adjustment requires a Option 1. Debit to electricity expense and a credit to accrued expenses. Option 2. Debit to prepaid expenses and a credit to bank account. Option 3. Debit to electricity expense and a credit to cash in hand. Correct answer is debit to electricity expense and a credit to accrued expenses. 45. An accountant discovers that a 25,000 takas adjustment for accrued interest payable on bank loans was completely omitted. This error means, Option 1. Net income is overstated by 25,000 takas, and liabilities are understated by 25,000 takas. Option 2. Net income is understated by 25,000 takas, and assets are understated by 25,000 takas. Option 3. Expenses are overstated by 25,000 takas, and equity is understated by 25,000 takas. Correct answer is net income is overstated by 25,000 takas, and liabilities are understated by 25,000 takas. 46. Where are prepayments and accruals explicitly grouped in the detailed notes to the financial statements of a company under IFRS IAS rules? Option 1. Under other current assets and other current liabilities, respectively. Option 2. Combined alongside long-term provisions under non-current rows. Option 3. Merged